Good morning, everybody. Welcome to our Thursday questions and answers session. We're spending some time with Marnus Picard today. He's the analyst who covers BHP Bulletin for us, or well, they're called BHP Group now. We affectionately know it as Bulletin, Diversified Mining Group. Certainly a stock that has to be in every portfolio if you consider it only from a diversification perspective, but looking forward to what you're about to share with us, Marnus, and then we'll jump to Sean with the technicals before we throw open to questions. If you have questions that pop up, please type them in the chat for us, or you can ask them outright afterwards, but please participate. Ask your questions. There's no such thing as a dumb question, and we look forward to handling those questions for you. Thank you, Marnus.
Thanks, Otto. Welcome everyone to today's call. We'll be having a look at BHP. So for today, we'll quickly have a look at the macro environment, what commodity price movements took place over the last year and 5 years, and then supply and demand specifically towards BHP's, let's call it metals or commodities. The copper industry, we'll quickly have a look at the copper miners' relative performance. So that's more to the local listed entities, although they don't mine copper in SA. Then BHP Group, we'll have a look at their revenue contribution, their financials for 2025, and then the Vicuna joint venture. BHP's intrinsic value we'll have a look at, and I'll shed some light over there. And then the recommendation is a hold recommendation. So if you look at the performance of these commodities over the last, let's call it year, rhodium's outperformed. Platinum is pulled back now slightly, but it's still done pretty well. And then gold is also pulling back a little bit. It looks like it just wants to ease up on the run. And that's probably with some news from the US and China looking like they might get a trade deal, but we'll see how the uncertainty drives it further. Palladium also in correction phase after hitting a bit of a peak earlier for the last 12 months. Copper is up for the year, and then iron ore is kind of flat. Now, considering this 12-month chart, this is what a 5-year chart looks like. You'll see that rhodium is still not close to peaks. It's still in a deep drawdown. Same with palladium, iron ore is down, and then the outperformance there, gold, platinum, and copper. Now, I wanted to show this. Keep this in mind when we chat about the financials for 2025 on BHP. In terms of the copper producers, you can see for the local listed ones, I've included Freeport-McMoRan here, but that's more of a New York Stock Exchange listing. Anglo America, it's performed pretty well over the last year, but that performance basically came in September when they announced the joint merger with Teck Resources. They are going to merge, but that time frame on that is about 12 to 18 months, so it's still a long way off. Then you have BHP. It's currently slightly below, below than the start for the last 12 months, so it's in a slight drawdown, but not something too massive. Then Glencore, it's not performing pretty well. It was in line with BHP earlier this year, and then the April dip came. It dipped quite hard and struggling to move back. Freeport-McMoRan recently pulled down or draw down a little bit there from being close to kind of flat also earlier this year. Now, Freeport-McMoRan used to be the largest copper producer. And when I say used to be, if you look at their December 2024 financial year data, or the production numbers for copper, and then you look at BHP's June 2025 production numbers. So remember, Freeport still needs to release their financials for 2025 at the end of December. So that will only probably be in April or Feb somewhere. If you consider that, BHP outperformed, so it produced more copper in the last financial year, which is 2025, than Freeport-McMoRan did in 2024. So they're now the largest copper producers. In a bit of a recent report in BHP, it's quite interesting, this chart that they showed in their analysis on copper. So your left or your y-axis there, that is megawatt hours per, of usage of electricity consumption, and then your GDP per capita. you can see that in 2021 that your orange circles, and then 2035 expectations is your gray circle. That electrification, or the switch over to more electric usage, is anticipated to grow quite a bit. Now the growth there's a few drivers here which we'll discuss now, but you can see the largest countries with quite a bit of population, the US, China, India, Indonesia, all these countries are expected to use quite a bit more electrical, I don't want to say appliances, but products into the future, which is a big driver for copper. If we have a look at this chart, if we take demand for 2021, demand for 2035, and demand for 2050, it's anticipated that copper demand is expected to grow 70% through to 2050. The growth is economic growth, so your population grows, GDP grows, people use more electricity, there's the population grow as well. And then there's another point over there, energy transition, which is where the world is trying to get to, is this green energy. So let's say a coal power plant is replaced with a wind turbine, which uses massive amounts of copper. Also, a normal car that goes from a diesel car to a electric car, it uses a lot of copper in the core of those cars. Those type of things are energy transition, and that's anticipated to grow as well. You can see that for between 2021 to 2035, and the same from 2035 to 2050. Then digitalization, so more electric usage, everything that's manually operated moves into a more electrical phase, those type of stuff. That's also anticipated to grow. And then substitution is, which will lower your demand for copper. That is using a different product that can be a replacement for copper, or even recycling that comes through here. So you can see the growth demand is quite larger into the future, anticipated to increase quite a bit. This is a specific chart still from BHP, where they showed what the supply would look like from their own mines, and how significant investment is required in order to be able to supply the demand requirements into the future. And this chart goes up to 2030. Your orange, the deeper orange color, that's current operations, lifetime extensions, so that's increasing the life of the mines. Then you got probable brownfields projects, or brownfields. That is where a mine's already in operation, already got equipment, everything, it just needs to expand. And then there's possible brownfields. That's the orange slide, stripes over there. And then you get your gray area with greenfields. Greenfields is untouched mines, just still a mine that needs to be developed, a mine that still needs to get equipment, all those type of things. So that's mines that's undeveloped completely. And then your dotted line there, that's BHP's anticipated demand forecast for copper. So you can see how the dynamic change and how that lines drop off from current operations. And the reason it drops off is as you mine and you get to closer to the end of life of mine, the grades decline, the production numbers decline. It becomes more difficult to mine the copper. So that's why investment is such a big important part for these type of miners. And that's why the Vicuna joint venture is such a big investment for BHP to secure copper into the future. We'll discuss that shortly. Then in terms of copper demand versus supply, this is more of a chart from the International Energy Agency, just showing the same. You've got your global expected supply, which is dark blue. That's the base. That's anticipated mines coming into production into the next foreseeable future. High production cases, which is your light blue now. Top part there on the supply chart. That's if production is better than anticipated. Then you got your scenarios for copper demand, which is your dark red, and then additional scenarios that's, let's say copper demand grows faster than anticipated. That's the top part. You can see there the supply demand dynamics is quite mismatched with low supply, high demand. So you're gonna get to a point where platinum is also almost at the moment where supply is so much lower than demand that caused the platinum prices to increase quite a bit over the last few months. And this can take place with copper as well. Just keep in mind that they anticipate this demand and supply dynamics to play out between 2030 and 2035. So you've got a bit of time here. But it is something that is anticipated to be a big play in the copper into the future, the supply-demand mismatch, which could potentially increase prices quite a bit. So considering that 5-year chart I showed, here's a revenue split between 2021 and 2025. You can see that coal kind of stayed the same in revenue contribution for BHP, where copper was a smaller part and then iron ore such a large part. But now iron ore declined in price, copper went up. And look how the revenue dynamics changed, where it's almost the same between copper and iron ore, and then coal stayed more or less the same. We expect this copper dynamics to change even further. Iron ore is very much controlled by the production industry, or the building industry, construction industry, that's the right word, in China. And it seems like that's still a bit of a constraint from their end. So with the copper demand and supply mismatch anticipated, we do expect that copper will be a larger part of revenue into the future. And also with the joint venture coming through in 2030, these dynamics might change BHP's revenue contribution quite a bit. So for 2025, revenue declined by 8% for the year. Now, it's important to note here that the realized prices declined. That's why that declined, because copper production actually increased and iron ore production increased. So that was more effect from the realized prices that were lower and iron ore and coal. And then also that nickel mine that closed down in the western side of Australia. It's suspended just because of the current market dynamics, just as more supply than demand, which is why there's a bit of suppressed prices, and they decided to rather close it down or suspend it for now. They review that decision, if I remember correct, in Feb 2027. But profits from operations still increased 11% during the year. That's quite significant when you consider that they had low realized prices. So that's improved cost control. And then also another big player was the increase in production number from copper and iron ore. Underlying EBITDA declined 11%, and net operating cash flow also declined by 10% during the year. Then, as mentioned, copper production increased 8%. They're now the largest copper producer, and it was driven by higher or improved grades and also increased output. And then iron ore, that achieves its third consecutive production record. And then capital allocation in investments, that totaled $9.8 billion. And with an additional $2.1 billion that's committed to the Vicuña joint venture in Argentina. Then if we have a look at the Jansen Potash project, that's 68% completed. The first production is still anticipated to be around mid-2027. So we should see the effect in the financials, considering that it's got a June year end. We should see that probably most likely only in 2028's financials, possibly a small bit in 2027. And then long-term operating costs is expected to be at the lower end of the global cost curve. Now, the Jansen Potash project, CapEx was a bit of a negative on this end of it. That increased, the anticipated CapEx increased from $5.7 billion to between $7 and $7.4 billion. So cost is going to be a bit more to get this plant up and running and to get to that production point. Then, as a last point, final dividend of 60 cents per share was declared for 2025, bringing the total dividend for the year to 110 US cents. That represents a 55% payout ratio, and then the 2025 dividend is 25% lower than 2024. Now, that's kind of expected when you have an EBITDA that's declined 11%, revenue decline, and also your net operating cash flow declined, which will affect your dividend payout. So let's touch on this joint venture. This is quite exciting joint venture. The BHP formed a joint venture, the Vicuña joint venture, with Lundan Mining. That's a Toronto Stock Exchange listed entity. And that joint venture includes the Jose Maria and Filo de Sol copper deposits. And that's located in Argentina, but it's on the Argentine and Chile border. You can see on the chart on the right, or the layout, or the chart, there is a Jose Maria mine and Filo de Sol mines, those blue dots. So you can see they're close to Chile border, but it is in Argentina. The Filo de Sol mine is one of the largest copper deposits that's discovered in the last 30 years, so it's significant. It's quite big. And then also during the year, BHP and Luna Mining completed the acquisition of Filo Corp, which is also a Toronto Stock Exchange listed entity. They now own 100% of the Filo de Sol deposit. So that mine is already part of BHP, with the only exception now being that BHP Canada and Luna Mining will form that joint venture, but the BHP will still need to acquire 50% of the Jose Maria mine, and that will take place through a cash payment. So both parties will contribute their 50% interest in Filo Corp and Jose Maria mine into that joint venture. They'll form that together. But what's a quite an important point here is the integrated report that still needs to come out in the first quarter of 2026. Now, the integrated report is going to give you a feasibility study. It's going to give you production numbers. It's going to give you the deposit numbers. It's going to give you what equipment's required, logistics, cost of mining, all these type of things. Make sure that that's actually a number that can be used into the future for mining, and there's actually a case for this mine to take place. And while it's quite exciting that it's the largest deposit found in the Filo de Sol mine in the last 30 years, this will clear up some of the value that sits in BHP for these mines. It's quite difficult to include a mine like this without any numbers and feasibility studies and costs and things to consider in evaluation that will only be more clear in next year. It's almost like guessing. So we try to consider some of it, but it's a very, very small part in the valuation just because it's very unclear. Most of the valuation will be production as is, the Jansen project, and so forth, and copper prices that should increase into the future. So I just wanted to make that clear that the integrated report on this is not out yet. It's only next year, which will clear up some of the uncertainties in this joint venture. Then if you quickly have a look at the valuation, it was valued on an EV/EBITDA multiple. It's got the bear case at 4, base case at 5.5, and bull at 7. If you look at the chart below, you can see here the 15-year average, the EV/EBITDA was trading at about a 5.6, so hence the base case at 5.5. And then we don't see a 7 times multiple, considering also the joint venture and all the projects they have going on, as an unlikely case, and that's why it's carrying quite a big weight at 30%, and the bear case only much lower at 15%. So should anything go wrong, or there's a very much downturn in the macroeconomic side of things, so less demand, that's only carrying a 15% weight. If you bring all that together, you see that just on the bull case, the implied share price is at 602 Rand a share, and that brings the weighted intrinsic value to 510 Rand a share, which got, when these charts were all done, around a 4% upside. And here's the old recommendation. So that brings me to an end of my side of the presentation. I will hand over to Sean that will do the technical analysis for you, and then you're more than welcome to ask some questions if you'd like.
Yeah, good morning, everybody. Thanks, Maurice. Very comprehensive analysis there of Billiton, or BHP. Yeah, you can see the chart there of BHP Billiton. This is into yesterday's close. Excuse me. So again, it's trading above always moving averages. So both the medium and long-term trends remain bullish. In the medium term, or if you can see it, the share price has been moving sideways. We've been a trendless trading range, as well as call it a symmetrical triangle, and that resistance trend line from the top comes from its January 2024 high. But anyway, saying that, in the short term, the share price has broken above that upper resistance at around the 489 level. My charts have just gone blank here. And yeah, so that's broken out above that trading range and has moved above that long-term resistance trend line. As I said, it was taken from the high of January 2024. So the share price is trading very close to, as Morris says now, the intrinsic value of 510. And as I say, we have a whole recommendation. Saying that, as I say, my chart's just gone blank. But today it opened at yesterday's high, you can see on the chart there, and it has pulled back about 1%. So it was trading about 495, or you can say it was trading about halfway through yesterday's candle. Yesterday's that width of that candle, so it's pulled back halfway through there. You can see on the chart there that the MACD indicator, the oscillator, it is trading in overbought territory, and it's got no clear bearish signals yet. And the other charts, like the other technical indicators, like the RSI and stochastic, are also trading, call it in neutral to slightly overbought, and also no real bearish signals. So it's a bit difficult at the moment. If it does pull back, I would say the previous support low around about 475 might be a good area to get in, which is roughly about that blue line, which is the 50-day moving average. But it's all looking very bullish, and we'll see where it goes from here. Thank you.
Yeah, I think if you look at the chart there, no, just go back to the chart, please.
Yeah, sorry.
If you look at the chart there, where it made those bumps from the bottom support, up to the resistance level repeatedly, and you look at the period sort of between August and September, we really had small bars pushing it up, and then small bars coming down again, and then we sort of had a consolidation period where there was a hell of a fight with the bars being very long from sort of end of September throughout October almost, and now the last bit of a push. It is in a bullish trend, but judging by what I'm seeing on the screen, and the fact that it's coming into a resistance, a long-term resistance from that previous high, I would bet that it's pulling back as well. It certainly looks up, and the fact that it is at our intrinsic value, there's nothing fundamentally really suggesting that that they should push a lot further at this point in time. So I would bet at least to the sideways support line, and maybe even back into the bottom of the channel. If you look at it from the beginning of the year, it's sort of a sideways channel all the way across like that. It may even hit that level around 450 in a proper pullback, and the trigger for that may be, and not that BHP has any gold interests, they do produce gold as a byproduct, but it could be, be getting a push on the back of the rally that we've seen in the other commodities. So I would bet at a pullback and better levels to enter into the stock. So Manus's recommendation of hold, and with a 510 intrinsic value is probably 100% correct. All right, that's just my take. So let's run to the chat quickly, see if there's any questions. Nothing at the moment. Anybody want to ask something outright, guys? Just switch on your mic. You don't have to switch on your camera if you're shy. But if you do have questions, then just throw it out there whilst we got time. Doesn't look like it. I suppose a lot of the guys in the portfolio do, on the call today, do own Bulletin. We've got a lot of clients who do own Bulletin. And as I said at the start, it's a well-diversified miner. It gets you, because it's got a lot of earnings offshore, it gets you some currency protection. There's a lot more to it than just a mining stock, or than you would get from something like a local mining stock, a gold stock or so. All right, so let's see. Is it better to buy copper versus BHP? All right, Manus, I'm going to leave that to you.
Cool. So the big thing with let me start here. It depends on what portfolio you have. If you're a local portfolio, you can't buy copper outright. It's going to be quite difficult. And then so buy BHP. But if you have a offshore portfolio, you probably have to buy a copper ETF, because if you buy copper futures, they expire. You have to roll them. There's a bit of extra additional work to it. Then I'll probably still lean more to buy the copper producer unless you can find a good ETF that's liquid and that allows you to buy copper outright.
Thank you, Manus. Yeah, Rajesh, I hope that answers. Vessel says, what's your take on FCX? FCX, Freeport, McMoran, they are the biggest gold producer, well, one of the largest gold mines in the world. They own in Indonesia. So I guess they've had a good run on the back of the gold prices, and I haven't looked at a chart of theirs to see what they've done in the recent weeks, whilst the other miners have come down, but I suspect they would have come down a bit as well. They do, however, have not just gold interest, as Marnus has highlighted. So I guess if the gold price settles down again, then maybe it gets overcooked on the sell side, and you can take a dip at that vessel. But like I say, I think their share price has largely been influenced by the move in gold because of their large exposure to that metal.
Yeah. Also, just consider what portfolio you have. If you've got a local portfolio, you can only buy BHP.
Yeah, but I mean, most of the guys, trade local and offshore. So they could certainly take a dip in FCX if they wanted to as well. Although that's not the topic of the discussion today, we simply used it as a comparison of one of the competitors. Right, that's Vessel's happy. He's got a thumbs up there. Anything else, guys? It's 11:56. Otherwise, I'm going to close. I don't see anything. We'll be back next week, Thursday, and we're going to be talking to Manib, I think, about Fortinet. They are a network security company listed in New York, and it'll be interesting to see how that fits into the whole tech scene. So look forward to your participation next week. We'll be back next week, Thursday, same place, same time, and we'll be talking to Monique about Fortinet. Guys, have a fantastic Thursday. Manus, thanks for your input. Sean, as always, donkey. Cheers.